Number 1, keep your credit utilization low. Credit utilization simply means how much of your credit you're using compared to the total amount that you have available. Keeping your credit card balance low is one of the best ways to do this. Experts recommend using less than 30% of your credit limit on any card, and lower is even better. Become an authorized user. Another good credit tip to quickly improve your credit score is to become an authorized user on a friend or a family member's accounts. While not all credit card issuers allow this, authorized users, this tactic can be easily useful if you're unable to increase your credit limit or have a short credit history. This can also help build credit for your kids. You can add your kids as an authorized user. Some companies allow this, some don't, so make sure you check with your company. And then you can help build credit for your kids without them even knowing. So when they get older, they have nice, good credit. Become an authorized user. Did you know that you can add your kids to your credit cards? You can add your kids to your credit cards, and it can help improve and build a credit score for them. So when they get older, they're able to use that credit score to obtain a house, a car, a loan for whatever they need. And then whenever they need a new credit card, that can also help build and get more years on the credit line. Number 3, make sure you pay your bills on time. I know sometimes life can get difficult. This should be very easy to keep track of. Just make sure you have the dates on your calendar for when the bills are due, and just make sure you pay them on time. Number 4, check your credit report. A single error can cause damage to your credit, believe it or not. And you could probably fix it, and it could boost your credit score faster than you think. Here's 4 ways you can check your credit for free. Number 5, keeping old accounts open. Believe it or not, it averages out all your different credit cards. So if you have one that's open longer, it's going to help your credit score. And this is why I kept my older credit cards, and I still got some new ones. And now the average for my credit cards is the average of how many years I had those credit cards. Your credit history can also represent about 15% of your credit score, so it is very important. Similar to your employment history on an application, your old credit accounts can represent your reliability to the credit bureau. And finally, number 6, don't apply for too much new credit. If you don't need that much credit, why apply for a whole bunch of new credit? Opening up new credit accounts can have a great deal of effect on your credit score, because each time they check your credit score, and let's say you're trying to make a big purchase, they highly recommend that you don't do that because it lowers your credit history and your credit score. Each application for a new credit can trigger a certain type of view or review called a hard inquiry. Too many hard inquiries at once can trigger a red flag for lenders, and they may view your actions as a plan to take on a lot of debt. And if you intend to apply for a new credit card, which can lift your credit score and try to spread out your applications. So some of you might be wondering, how's my FICO score made up? Your FICO score is made up with the following. Amounts owned is 30%, new credit is 10%, length of credit history is 15%, credit mix is 10%, payment history is 35%. How is your credit score calculated? Well, here's how it's calculated into 5 different categories, and here they are. 6 tips to improve your credit score. 1. Keep your credit utilization low. 2. Become an authorized user. 3. Pay your bills on time. 4. Check your credit report. 5. Keep an old account open. The old accounts show the rest of the new accounts, and it averages out the ages for those accounts. So whenever you have people pull your credit score, they see the older credit cards, and it helps your credit score. Don't apply for too much credit or new credit.